I remember the granola bar. Eaten standing up, 6 minutes late, wrapper still on the kitchen counter when I left. I remember the badge swipe. The elevator. The exact sound the trading floor makes at 9:15 a.m., that low, pressurized hum. Like the building is running at a frequency the human body wasn't quite designed for. I remember sitting down and thinking, just for a second, that I was starting to understand this place. I had no idea that in 43 minutes, I would be sitting in that same chair, unable to move, watching a number climb in the wrong direction. A number that would eventually reach $440 million. And somewhere in the sequence of events that built that number, there was a step with my name on it. Let me tell you what it actually feels like to be inside something like that. Not the version in the financial press. Not the clean retrospective where every mistake has an obvious label. The version where you are 23 years old. The screens around you are showing things you don't fully understand yet. People are moving faster than you can track, and nobody has time to explain anything. Because right now, something is very wrong. And nobody knows exactly what. To understand what happened, you need to understand what this place actually did. The firm was a market maker. In simple terms, they bought and sold stocks constantly, not based on long-term analysis, not based on company research, based on capturing tiny price differences across enormous volumes of trades. Fractions of a cent, millions of times a day. The math only works at speed, so the trades weren't made by humans, they were made by algorithms. Software executing decisions in microseconds, faster than any human could blink. And part of my job was supporting the team that maintained and deployed updates to those systems. That's how I ended up in the room, the night before August 1, 2012. The deployment started the evening before. A software update. The New York Stock Exchange had introduced a new order type, and the technical team had been preparing for weeks. Tested, reviewed, checklist ready. There is always a checklist. I wasn't running the deployment. I wasn't the lead engineer. I was doing what interns do, supporting the process, handling the pieces handed to me, checking boxes as instructed. 8 servers needed the update. We worked through the list. 1 through 7. Done. We finished. We verified. We went home. We missed one. Not dramatically, not with any alarm. One server in a rack, configured slightly differently, needing one additional step that wasn't on the version of the checklist we were using. The update landed on 7 servers. The 8th stayed exactly as it was. We didn't know. We went home. The next morning, 9:15 a.m., badge swipe. Elevator, lore hum. Coffee, 9:30, the bell. 9:31, the first alert fired. Nobody panicked. Alerts were constant on this floor. Most were routine. Someone senior glanced at a screen, said something I couldn't hear, and moved on. I kept my eyes on my own work. 9:33. Another alert. Then another. And then, I remember this specifically. One of the senior traders stopped typing. Completely, mid-sentence. Hands above the keyboard. Just stopped. I watched him lean forward toward his screen. That was the first moment I felt it. Not fear yet. Just wrong. By 9:37, 3 people were standing behind one terminal. Nobody was speaking above a whisper. The phone started. One desk phone. Then another. Then somewhere across the floor. 2 at once. The keyboards were quieter now. The room, a room that was never quiet, was getting quieter. 9:40. Someone said, "Which server?" Nobody answered. 9:42. I heard someone say very quietly, very carefully, "What the hell is happening?" Nobody reacted. That was the moment when quiet stopped feeling like focus and started feeling like something else entirely. Here is what was actually happening, which I would not fully understand until much later. On the 8th server, the one we missed, there was old code. A system called SMARS. An automated routing system built for a trading strategy that had since been discontinued. The code had been repurposed. The flag that used to activate SMARS now activated something completely different in the updated system. On 7 servers, the flag triggered the new code correctly. On the 8th server, the flag triggered SMARS. And SMARS did exactly what it had always been built to do. It started routing orders into the market. Large orders, rapid orders, buying stock at market price, selling it back immediately, over and over, each cycle at a small loss, thousands of cycles per minute. The code wasn't broken. That was the terrifying part. The code was working perfectly, for a world that no longer existed. And it didn't stop. It had no mechanism to notice that anything was wrong. It just ran. 9:45. The alerts weren't individual anymore. They were stacking. I watched a monitor across the floor refresh, and the list of active alerts was longer than the screen. Someone on a phone, voice controlled, said, "I need the full position report, right now. All of it." A pause. Then, "That can't be right." 9:48. I saw a risk manager, a man I had watched work with complete calm every single day for 6 weeks, push back from his desk, stand up, walk to a window, and just stand there. Maybe 4 seconds. Then he turned around and started moving faster than I had ever seen him move. That was the moment I understood. This wasn't a minor system issue. This was something else entirely. The technical teams were working the problem. But working the problem inside a system this complex doesn't look like a clean diagnostic sequence. It looks like 6 people pulling up different terminals, cross-referencing outputs, eliminating possibilities, calling engineers who aren't in the building, pulling logs, comparing timestamps. Meanwhile, the system kept running. Every second, more orders, more positions, more losses compounding on the losses from the second before. 9:52. Someone said a number out loud. I watched 3 experienced, senior professionals hear it and go completely still. One of them slowly removed his glasses, set them on the desk, did not pick them up again. 9:58. The floor was running on something that wasn't quite adrenaline and wasn't quite fear. Something more concentrated than both. You could hear keyboards from across the room. That's how quiet it had gotten. The phones had mostly stopped. Everything had moved to terminals, to headsets, to the tight, compressed language of people communicating as fast as possible, with as few words as possible. I was not part of any of it. I was sitting at my desk, still, watching, and I was starting to connect things. The deployment, last night, 7 servers. The 8th, I hadn't said anything yet. I didn't know enough to know if what I was thinking was right, but I was thinking it. 10:06. Someone identified a pattern in the trading data. One server generating a disproportionate volume of the rogue activity, not all of it. One server. 10:09. The search narrowed. 10:12. They found it. 10:15. Someone shut it down, and the floor stopped. For maybe 3 full seconds, in a room where something is always moving, always processing, always running, nothing moved. Then slowly, like a room coming back to life after a power cut, people started pulling up reports, assessing positions, calculating the damage, and the number assembled itself across the screens. $440 million, gone, in 45 minutes, from one server. I walked to the lead engineer on the deployment team and said, very quietly, "I think the 8th server didn't receive the update." He looked at me for a long moment, then he turned to a terminal and started confirming what I already knew. I stood there while he confirmed it. I want to tell you, I felt something clear in that moment. Guilt, or relief, or fear. What I actually felt was nothing. A complete absence of anything. Like the moment had exceeded the emotional system's capacity to process in real time. The numbers sat on the screens behind us. $440 million. The investigation came. Internal first. Then regulatory. Meetings I wasn't in. Conversations that stopped when I walked past. I told the truth, fully, without reservation. Because the truth was straightforward. I had been part of a process that had larger failures built into it long before I arrived. The checklist was incomplete. There was no independent verification step. The old SMARS code should have been fully removed, not left dormant in an active system. The risk controls should have shut down the runaway activity faster than 45 minutes. None of those failures were mine to design. All of them were present the night I helped complete a checklist that missed one server. The final report placed responsibility where it belonged. Not on one person, not on one moment, but on the accumulated gaps in a system that had grown more complex than the controls surrounding it. My name was not in the report. I still read it every few years. Here is what I actually learned. Complex systems don't fail because of careless people. They fail because complexity grows invisibly, layer by layer, decision by decision, until it exceeds the ability of anyone inside it to hold the complete picture. Knight Capital's infrastructure had been built over years. Old code from discontinued strategies sitting dormant inside active systems. Flags repurposed across different layers, meaning different things in different contexts. Each individual decision made sense when it was made. Together, they built a system with failure written into its structure. Not by anyone who intended failure, but by everyone who added the next layer without a complete map of what was beneath it. The missed server wasn't the cause. It was the last condition in a chain that required dormant code that was never removed. Repurposed flags with conflicting meanings, a deployment checklist that didn't catch incomplete rollouts, and risk controls that needed 45 minutes to stop a system running at microsecond speed. Remove any one of those conditions, the outcome changes. Together, they were a system waiting for exactly that morning. The second thing I learned is about speed. This firm was built around one advantage: moving faster than everyone else. Speed was the product. But speed has a specific relationship with error that nobody talked about clearly enough. When a human makes a mistake in a slow system, the mistake propagates slowly. There is time to observe, identify, intervene. When an algorithm makes a mistake at trading speed, the mistake propagates at the speed the system was designed to run, faster than human perception, faster than human response. In the time it took to find one server in a rack, the system had already executed enough trades to exceed the firm's entire capital reserve. The speed that made the firm profitable was the same speed that made the failure total. Knight Capital survived, barely. An emergency capital injection of $400 million came within days, in exchange for 70% of the company. By 2013, the firm had been acquired. A company that processed 11% of all U.S. equity trading volume ceased to exist as an independent entity. Because of one server. Because of one unchecked box. Because the system had grown complex enough that a single gap in a deployment checklist could produce consequences no individual could see from where they were standing. I left at the end of my internship, built a career. Most people I work with now don't know I was there that morning. But I carry it. Not as guilt, not anymore, but as a reference point. Every time I'm inside a complex system, every time I'm handed a checklist, every time I'm one node in a process larger than I can fully see, I think about the 8th server. I think about what it means to sign off when you cannot see the whole. I think about a room going quiet, in a way it had never been quiet. And a man slowly removing his glasses, setting them down, not picking them up again. Complex systems don't collapse all at once. They collapse one unchecked box at a time. Somewhere right now, another deployment is running. Another checklist is being completed. And in a rack, somewhere in a building that hums at a frequency the human body wasn't quite designed for, there is a server that needs one more step. The market opens in 43 minutes.